Very good afternoon to all you wonderful traders out there, all you beautiful ladies, and all you handsome gentlemen. Welcome. Welcome to our daily live stream brought to you by DCFX Asia, and I am yours truly, Abe Layman, coming live from Central Java, Indonesia. Right. Well, today is the 20th of June, Tuesday, the second day of the week. It is always the calm before the storm. Coming in Thursdays, Wednesday and Thursday, there'll be loads of high impact data. And well, market has been very quiet yesterday because the US was celebrating Juneteenth holiday. Today they will be opening, so it'll be back to normal. But I wouldn't expect markets to be going rocking and rolling just yet. Maybe tomorrow, but today could be a warm up. So um, I was told by some trader friends when I conduct training, they told me that look, if you don't have the proper mindset, the best trading system will never be fully optimized. So I was told that psychology is the key when we train new traders, and I followed the advice and the result has been good. So for all my training that I give, the first lesson is the psychology of things, the market psychology as well as the trader psychology, and that is the topic for today. For the first part, the first half an hour, we'll do the psychology of market and trader, and after that we'll do the market analysis. Okay, so if you guys are ready, let's start with today's lesson, which is yeah, psychology, market, and trader. Well, market has a psychology, and it is interpreted by the movement of prices that we all know as charts. Well, back then, in the 30s up to the 70s, it was tape reading, was reading the tape of prices. In the 80s, when technology come into play, they have computers with screens. Then the 90s come the internet of things, and the new millennium, there's so much that developed. It was the pace was super fast, and now these days we can trade anywhere, from anywhere, as long as you have internet connection and with a smartphone or a laptop, and you can trade. Isn't that wonderful? Right. So technology has given us ample opportunities to create money from anywhere, and that's beautiful. So and of course, financial technology or the digital economy is the way to go, and it has proven so when in 2020 the whole world got disrupted because of the pandemic. And thanks to COVID-19, we all now can work from home. Isn't that wonderful? All right. So, but what's lacking is the development on the psychological side. I don't see much training has been given to develop the psychological factor of the trader. All right. So here goes. Here goes nothing. Okay. What we have here is the chart pattern, which we all know. It starts, you start reading from the left with an open buy because there was optimism. And then the next, when price increase, people get enthusiastic. Remember the trend? We have the initiation and then the accumulation. So this is the start. When we get enthusiastic traders will tell their friends, their neighbors, their loved ones that, hey, it's time to buy this, this, this. and those people that we tell them to will tell their friends, and it creates the enthusiasm. That's where the accumulation phase kicks in. Then comes exuberance, because those people who start at the optimism stage are already making profits, but they're still holding on to the stocks, or to the asset class, waiting for a higher price. Then comes euphoria. Euphoria is the excess stage of a trend, meaning it goes first, it goes accumulation, initiation, then it comes down a bit, then it goes accumulation, then it comes down a bit, then it goes very high in a short space of time. That is the excess, and that is what we know as overbought. So when you see prices climb up very fast in a short period of time, that is an indication that the trend is coming to an end, because it has reached the overbought position. So after the overbought, and candlesticks will tell you of a bearish reversal signal. You can see shooting stars, you can see evening stars, you can see dark clouds, you can see a hangman, you can see a gravestone doji. So all those are bearish reversal patterns happening at the top, and when you use Bollinger Band, it will be happening at the top band. So that will be the time that the psychology of the market says, okay, the bulls are tired. It's time for the bears to take over. That is where we see the sign of good to sell. So those people who have bought during optimism stage, enthusiasm stage, exuberance stage, they can still make a bit money when it comes to euphoria stage. But when it comes to anxiety stage, when it starts to pull back a little, they get anxious. So those people who entered late at the euphoria stage may not like it, right? Because they are not making profit yet. But those people at optimism and enthusiasm they are laughing their way to the bank already. See? And after the anxiety stage comes the profit taking. See, after an overbought situation where people are buying, then there's nobody buying anymore, and people start to sell. That's when we call the market is in a profit taking stage. So for us OTC traders, we can enter the market as a seller. So we open sell at the profit taking stage, then the price will come down. Fear are for those who have buying positions and they have not liquidated at the anxiety stage, so their profit become less. Once they start to fear, they start to sell away. When more sellers are in the market, the pressure for prices to come down is greater, right? So comes to the fear stage. After fear goes to despair. And for those OTC traders who loves averaging, because prices come down faster than prices go up, the same thing like when you climb upstairs longer than you climb downstairs because of gravity, right? And that's how market behaves the same, right? So that's the psychology of the market. When it climbs, it take time, but when it drop, it likes to slide. So fear will go to despair, and people will add on. Those who love to average will add more positions to their open sell. Then those with a stop loss level at the top will bring it lower. So it becomes an SL plus. So if the market decides to just flick, yeah, it will hit the SL, but your stop loss level is at a plus point. So no big deal. You don't earn that much profit, but you still have your open sell at the bottom. Then goes to panic. Panic are those people who are still holding on to their buys at optimism. This usually applies to shares. People who own shares, when share prices come down, they start to panic, they don't know what to do. It's either they sell at a loss or just hang on to it, hoping that the company might recover, excuse me, or maybe just wait for the dividends later at the end of the year. Or, well, for people who trade shares, who own shares, how do you hedge your losses is simply by selling in the share index or the stock index. That's another chapter. But next, from panic comes to capitulation, meaning they regroup, see how much they have lost, how much they have to gaining, how much they have gained. And for those who have an open sell, are smiling, are happy because their position is making money. Then goes to discouragement because people feel that ah, it's not going to go up. It keeps sliding down. When actually, from the other side of things, we say it is an oversold position. Why? Because when prices starts to go down very slowly, then it starts to go a bit sideways. There is no more selling pressure, right? So the people get discouraged. Will it go up? Will it come down? They don't know what to do. So when in doubt, the best thing is to get out. Meaning, let go of all your positions, take whatever profits that you can take a break, wait for what's gonna happen next. It's better to wait when prices are moving sideways. When the crabs are in the market, it's best to just wait and see. All right. So when the bears are there, you sell. When the bulls are in the market, you buy. When the crabs are in the market, you wait and see. All right. So next comes a time where it's good to buy because everybody loves a bargain. We feel that at a low price, that is a bargain to be had. So it became a bargain hunting season. Right? So when bargain hunters start to create the euphoria of buying, spread the news, then enthusiasm get back into the market, gives hope that the price will go up again, then more people will go into the accumulation phase, then goes up to the relief. For those who are still holding on to the buy at the early part, they feel a relief because their floating losses are getting smaller, and goes up to optimism again. People feel good because those who had sold earlier already make money. Those who bought earlier and sold at the anxiety stage already make money. Then from there, they switch to selling. So they make money from buying, they make money from selling. And now at the bargain hunting season, they also want to make money. They enter the market again with an open buy, and their target is definitely beyond optimism. So that is the market psychology based on price movement. See, uh, I cannot explain it, but there is a correlation to how the market thoughts, because the things that move the market are not robots, are not expert advisors. No. Who moves the market? Traders, yeah. Bankers, yeah. Financial institutions, yep. But all of them are like you and me, humans. See? So we have this thing in our mind, all right, to think about what's going to happen to one asset class. We analyze the fundamental details, we analyze the technical data, we analyze the charts, then we come to a conclusion. So the thought processes of analyzing the market is in every one of us. We may all look at the same picture. If one says that, okay, gold is bullish, and we spread the word around, we tell them why we think that gold is bullish. With the charts, people get convinced, they'll start into a buying spree. And this enthusiasm created by analysts all over the world or by economists that they publish on their websites and their newsletters, or maybe in CNBC or CNN or Bloomberg, whatever channels there is, people get interested and people might want to partake in the party to buy gold that makes gold go up because the demand is big, but the supply is about there. So when you have a high demand, prices will go up. When you have no demand, prices will come down. Supply is about there, right? So it's always a matter of demand. The more demand created, the higher the price will go. The less demand available, the lower the price will go. So that is the market psychology for you, because humans are the ones who moves the markets. Yes, they can represent the financial institution, they can represent the banks, they can represent the hedge funds, but at the end of the day, it's all the humans, and we are humans too. So they look at the same chart as we do. They might use a different tools or different indicators or different moving averages. Everybody, each trader, each analyst have got their own style of doing things. I, for one, rely on two types of indicators. One is a lagging indicator, which is the moving averages. I use four of them, and Bollinger Bands. I use two of them. Then I also use a leading indicator. See, lagging indicator gets formed after the price has moved. Leading indicator is formed before the price gets there. So when I use leading indicator, that is why do I use that? Because I want to know where it's going. We know the direction from lagging indicator, the candles, the moving averages, and the Bollinger Bands. We know the direction, but we don't know the destination. Leading indicators will be able to tell us that, and that is why I use that. Okay, so that is market psychology for you. Next is to look inwards, or looking at the man in the mirror, looking at ourselves. Okay, so traders are humans and we are surrounded by loads of information. Okay, yeah, you have laptops, smartphones, expert advisors, robots, algos, technical indicators, charts, trade advisors, news, financial, and the list will go on. But you don't need to read to have all of that, because sometimes when you overanalyze, you can suffer a sickness known as paralysis by analysis. Sometimes different opinions based on one single asset class, and you are in the middle. One say it's time to go up, one say it's time to come down, one say buy, one say sell. You are in the middle, you don't know what to do. Then you become paralysis by analysis. So, sure, there are many indicators out there. Find one that is suitable for you. Not all my tools are suitable for everybody. I understand that. I can accept that. Yes, I know. Even though it is the simplest of all indicators, but people do complain. Yeah, so many lines. I cannot see so clearly. Okay. I can understand that. But if you practice every day on chart reading and looking out for setups, over time you will get that wow, eureka moment, that you suddenly realize that, hey, it's not that difficult after all. Really, swear, it's not difficult, it's easy if you make things easy. Right? So how to make things easy? First, we have to know the tool. You see, most of us forgot that we are the noblest of creatures created by God. And that is a God given gift to each and every human being. You want to know what that is? Here it is. The greatest tool is the human mind. Why I don't show this? This is the brain. The mind is an abstract tool. You can think about it, but you cannot touch your mind. You can't. You can touch your head, yes. You can screw your brain, yes. You can squeeze your hand. You can poke your eyes, yes. Those are physical stuff because the mind is an abstract tool that comprises of the brain and your feelings, your intuition, your heart, right? Sometimes brain and heart can combine to connect. Sometimes they don't. Well, your eyes are your source of information. What you see is what you get. What you cannot see is even better yet. Maybe, I don't know. But next is your sense of touch. See, when you use your sense of sight by looking, and then use your sense of touch by writing, the absorption of information is much faster than by using a single sense, which is your sense of sight or your sense of touch. So when you combine what you see plus your sense of hearing, you have three sources of information coming to your brain to process. Then your feelings is intuition, and intuition will come after a period of experience. And the best teacher for everyone is your own experience. So some people say, I learn by doing. Learning by doing, sure, all right, which is good. So that is why there's always artisan, there's always apprenticeship before a skilled person, a technician. Before you qualify to be a technician first you got to be a mechanic. So it's you have to learn by doing from not only the theory but the practical side of it. Even as an engineer, before I can become an engineer, I have to go through 3 years of online courses. Then I have to be at sea for about 1 year. Then I'll be qualified not as a top engineer, but only on the fifth engineer. Then I have to spend few more years as a fifth before I can go up to fourth engineer. Then I spend few more years and so on and so forth. So when it comes to trading, it's the same thing. You have to grow from one level to the other. But what you need to do is to train the greatest tool that you have. Train your eyesight, train your hands, train your thought processes, and train your intuition. All these will come together by itself. Don't force yourself to be able to do it like that. No, nothing is instant, my dear friends. Not in life, nothing is interesting. Nothing is instant unless you want instant noodles, instant coffee. Yes, those are instant. But trading skills, you need time. And the first thing that you have to do is to prepare yourself to have the right trader's mindset. And please, I always remind you to stay healthy. Why? Because mensana incorpore sano, it means that a healthy mind in a healthy body, right? So take care of your greatest tool. Next, what to do to sharpen up your skills? Visualization. See, there are three pictures on screen. On the left top, who do you see? An 18-year-old girl or an 81-year-old granny? Then on the right, which do you see yourself? The reflection, which is the lion, or the animal, which is the cat? So between the lion and Hello Kitty, which do you see yourself? And the last portion, the last picture is, what numbers do you see? Is it 428I or 48 double D? Well, 428I, if you look at the bottom left above the tail lamp, there are the numbers 428I, which is a BMW Series 428 2800cc car. And 48DD, well, I don't have to explain. I'm sure you know. So, see, visualization depends on your perception. See, it depends on your character. There is nothing wrong nothing right or wrong in the question. It's just a reflection of your character, right? Uh, don't worry. There's nothing wrong in seeing yourself as a lion because you are ambitious. You have confidence in yourself that you feel like I am the lion. Maybe you are a little down to earth. You know your ability. You're not so brave like me. I feel like I'm just the kitty. Hello, kitty. I look at myself. I'm just a small guy, a regular Joe. All right. When I look at the daughter pictures, do I see an 18-year-old girl or do I see an 81-year-old granny? Well, I'm young at heart. I will see it as an 18-year-old girl, right? So some of you may think that, oh, it's just an 81-year-old granny. Well, it's okay. It's your perception. See, what the mind can perceive, the body can achieve. Think about it. Next, once you practice your visualization, meaning you're able to catch chart setups and to catch trade setups and enter position at the right moment, at the right time. There you are. You have reached that level. That is good. May the trades be with you. So, once you practice your visualization, next, how to create that mindset. Okay, so the let's start from the right. A must in trading, you need to have a method, you need to have mindset, you need money management, you need a mentor. I'm not proposing to be your mentor, no. I'm just an oddball who loves to share the ideas of trading. A mentor is someone who has more experience, who has more knowledge, who can give you guidelines so that you do not fall into the traps that's everywhere in the market. See, experience will help. And the best mentor is your own experience. See? So take heart, don't worry. You know, the learning curve can be fun. To learning to trade to me is always fun because I love it. I love to trade and I love to learn. And I hope it can spread to all you wonderful traders that one day you become better traders. I will not be jealous if you can make more money than me. Hey man, that's good for you. Okay, right. There's no competition in trading. Yeah, people do competition just to get the prices. What I mean is one trader compete against another. At the end of the day, it's your own pocket, right? You trade, make money, go into your bank account, you spend it. It's all on you. So when you want to develop into a better trader, it's also all on you. You want to commit to learning how to trade, all on you. So let's take a look on the left side between a growth mindset and a fixed mindset. Growth mindset, resilient, doesn't accept a no for an answer. This is when they face problems. A fixed mindset say, problem quit lah, quit lah. That is fixed mindset. When it comes to challenges, the fixed mindset will say, no, I'm fixed. I don't want to take challenges. Thank you, thank you, thank you. But people with growth mindset sees that challenges are learning opportunities. Sometimes it can be painful, but if you take it with a pinch of salt and with a bit of humor, learning is fun. Challenges are fun. Next is when it comes to improving, a fixed mindset looks for shortcuts. Most new traders are always looking for the holy grail, the cup that can solve all problems which does not exist. All right. So when it comes to improving, a growth mindset wants to become better, so they keep on learning and they learn from feedback. Criticism. When I've been criticized, I will not be angry, but I'll say thank you to whoever criticized me. Why? Because when someone tells you that you've done something wrong, that's a gift. You know, what's the point of he? Right? If someone scolds me, Abe, you stupid, you done this wrong. I will not be angry. I say thank you, thank you, thank you. Show me how to do it right. Then I can learn. See? So he don't have to tell me that I'm wrong because it doesn't benefit him. So he tells me that I've gone wrong and he showed me how to do it right and I learn from there. And that's a bonus, right? So feedback is good. So if you think that by doing certain things on my live stream and you think that it's not right, you let me know. I'll be happy. I'll be happy to read your comments, good or bad. If it's what do you call, it helps me to improve, why not? Okay, then the consequence of work when it comes to success, he's quite happy. The fixed mindset there is for let the people enjoy lah. And fixed mindset never lives up to his potential because he's very comfort. He's happy in his comfort zone. That's for fixed mindset. For growth mindset, he have reached one goal. What's the next one? And what's the next one? And what's the next one? Okay, those are the growth mindset and the fixed mindset. Now let's take a look at the bottom right. Why professional traders are process oriented? Process oriented. Okay, professionals judge their trades by the way how they made their decision. See, before you enter a trade, you definitely have rules because that is part of your trading plan. Right? You plan your trade, then you trade your plan. So when you have a trading plan, there are rules. So after adhering to rules, you get a winner. Well done. Lose, it's okay, no big deal. That is if you follow the rules. When you break the rules, you got a winner. Ha, lucky lah. Then, if you break the rules, well, you broke the rules, you lost. Well, I deserve it. I've done that. These are my own experience. Yes, I break rules sometimes. I got lucky sometimes. Most of the time, I deserve to lose because I broke my own rules. Okay, those are process oriented because I like to know the process of things, and even when it comes to trading, I want to know the process of analyzing and then see the rules, follow the rules, then end results. Right. So when you are results oriented, okay, those are amateurs. Focus on the outcome, profit or loss. You don't profit, yeah, loss ah. You don't lose, profit ah. Well, amateurs focus on the outcome. I lost, it's a bad trade. I won, great trade. Results oriented traders miss important learning opportunities, tend to be impulsive trading, and do not have a long term mindset. So, there you are, ladies and gentlemen. Mindset is the key combination of your intuition and your thinking processes. So, mindset is the key. So, what are a trader's mindset? You may ask. Let's go to the next one. The profitable trader's mindset, there are 20 rules that you can adhere to. Number one, sense of calmness. So if you think trading is fun, those are old days. Those people shouting in the pit, traders pit, are over. It's all run electronically because during the COVID pandemic, the stock exchange You cannot go to the stock exchange because you cannot have close encounters with other human being. So you cannot have trading on the floor. People stick to their own homes with their own laptop, with their internet connection, and they trade from home. So the hype is from Hollywood. Remember Eddie Murphy in the movie Trading Places when they were trading orange juice? Take a look at that movie. The olden days, yes, they were olden days. It's over. All right, financial technology has taken place in the trading world. So now, trading is a sense of calm, a sense of zen. Number two is the ability to focus on the present reality. See, when you see the chart, what you see is what you get. That's it. If the chart is not telling you any stories, don't trade. When the chart says, hey, I'm coming, I'm going down, and then you start to plan. You want to short at what level? You want to go at where is your stop loss and where is your target profit, right? Focus on the present reality. Number three, not caring which way the market breaks or moves. Don't care. If you're not in the market, it doesn't matter, right? Number five, not caring about the money in the sense that because you have your limit, your stop loss, that means you have your limited losses. You limit your losses, that's it. You limit your risk, and that's it. There is risk management and money management all roll into one. So don't care too much about the money. You profit, good. Loss, okay. Next trade, please. Right? Always looking to improve your skills. There's so many ways to learn to trade. There are so many gurus in the internet. Some are good, some are like me, a clown. Seven, profits accumulate and flow in as your skills improve. See, between production and production capabilities, if you focus on your production, you will not grow. But if you focus on your production capabilities, this will grow automatically. Your production will grow automatically when you focus on your production capabilities. Number eight, keeping an open mind, keeping opinions to a minimum. See, market dynamics changes every other minute. All right, we may be looking at a bullish market and all of a sudden it turned down. There's no reason to it. We don't understand why. But if we have a selling position, a buying position, and it's turning down, what's the best thing to do? Get out. When in doubt, the best thing to do is to get out. Okay? And you have to accept the risk in trading. Sure, there's risk in everything in life. There's risk. We must accept that. You cannot be angry because when you are angry, you get excited for the wrong reason. Then you will not be able to control your emotions, and you will not be able to control your losses, and it will be a very sad story. So don't be angry. Never be angry when you are trading. Don't curse the market. Aya, you lousy market. You don't follow me. Don't blame anybody else. No, there's nothing wrong with the market. It's just back to you. Look at the man in the mirror. It's you. It's me. All right. Cannot get angry with the market because what I trade, I make my own mistakes, and that's me, not the market. Right? So, learning from every trade, yeah, you can learn. Sometimes people, okay lah, make mistake lah, okay lah, enough lah. You can take the shortcut, you can learn, or you can learn. Winning and losing trades accepted equally. Have a winning trade, okay lah, not bad. Losing trade, oh, okay lah, lose, it's okay. Next trade, please. It has to be equally, not like winning, we know, yeah, lose, nah, what's the point? All right, enjoying the process. You have to enjoy the process because it's process oriented. Trading your chosen approach or system, see, each individual has got their own style. All right, and a trader's mindset also suitable to what is comfortable with you. What are you comfortable with? Okay. Next, no feeling a need to conquer or control the market. This is out of this world. It's beyond reach. See, the daily turnover of the global market is about $7.5 trillion every day. Who has that amount of money? Not one single country want to use that amount of money to control the market. Nah, impossible. Feeling confident and feeling in control of yourself. Feeling confident, quiet confident, not overconfident. Okay? Now, feeling in control of yourself. So do not get angry. If you people want to make you angry, first thing you do, you raise your hand, you raise your right hand, then you use your left hand, you tickle your armpit, you laugh. Then you will not get angry, isn't it? 17 is a sense of not forcing the markets or yourself. Don't force yourself. What more you want to force the market? The market will say, who are you? So don't force yourself to trade. Don't force the market to do what it's not going to do because we can't do it. Trading with money you can afford to risk. Ladies and gentlemen, when we work, we get our pay. Before we got our pay, we already have our budget allowances, allocation, right? So every adult have a budget allocation for entertainment. Guys like to go party. Girls do go party as well, but girls also have shopping. Guys have maybe you know gambling a bit, some naughty things a bit. So this allocation, these are the disposable income. So if you want to trade, use the disposable income. So when you lose in trading, so the only thing you cannot go for your beer, you cannot go party, or you cannot go shopping. That's it. But your life continues. Your living cost is already covered, right? So that is what we meant by trading with money you can afford to risk. No feeling of ever being victimized by the markets. The market is not interested in any one of us. Ah, don't feel victimized. You make a mistake, you are wrong, you pay. Simple. You do it right, you get paid. That's the rule. You do it right, we get paid. We make mistake, we pay. And finally, taking full responsibility for your trading. Don't blame anybody else. Don't blame Ayah because the sky was cloudy. That's why my thinking like, no can do. No, you can't. Take that out of your system. You make a mistake, that's us. I make a mistake, that's me. That's it. I focus on myself, how to improve myself, how not to repeat the same mistakes. Never, ever blame anybody else. Okay, please. So, those are the profitable traders mindset. Finally, these are some axioms that we can live by. The trend is your friend. Follow the trend. Number two, trade like a sniper, not a machine gunner. Why? Because you'll run out of bullets soon. Three, plan your trade, then trade your plan. Number four, successful trading takes work and practice. That's why we give you demo accounts for you to practice. How wonderful is that? Living to fight another day is the most important trade. Last night I had 3 losses and I stopped trading and I haven't traded today. So living to fight another day is the most important trade. And finally, physical health, mental health are good trading brothers. Physical health, mental health, and good trading are like brothers and sisters. Maybe so for the ladies, you say, "Wow, brother only a sister." Okay, brothers and sisters. All right, they are physical health, mental health, good trading. They are the family. All right, you cannot live without one of them. You have to have all three at the same time. And ladies and gentlemen, I encourage you to take this. What type of trader are you? At the bottom is www.toptradertest.com. I hope you can see. If you can't see it, I read it for you. THARPTRADERTEST, toptradertest.com. Well, Dr. Van Thap has worked with 20,000 traders all over the world purely on trading psychology, and he has transformed the big money boys from winning one day, losing the next day, into winning every day. So it's the trader's mindset. Okay, right, ladies and gentlemen. I think I overshot my time. I'm supposed to do this for 30 minutes. Now it's already 15 minutes. So sorry to take up too much of your time. Now let's say hello to our audience. Adrian Stiglitz. Hello, Mr. Hello, Adrian. Welcome back. Good to have you back. Good afternoon, Go Walker. Welcome back. Okay, because if I see at DXY the bearish flag pattern to downtrend continues, maybe we'll be go to the moon, sir. Because tomorrow some news there. Yes. Okay, welcome back. Well, the dollar index, yes, it is a little on the downside, but it's a lot of wait and see because yes, tomorrow, beginning from tomorrow until tomorrow and Thursday, there are some data. Swiss National Bank, let me take a look. Swiss National Bank rates, that is on Thursday. And then there's also the BOE, Bank of England, also on Thursday. Tomorrow night, tomorrow 1 p.m. is the inflation rate for UK, the pound sterling, and 9 p.m. tomorrow, Uncle J or Jerome Powell will testify over at Capitol Hill to Congress. It will be a 2-day affair, Wednesday and Thursday. So expect Wednesday and Thursday to be rocking and rolling. That is on the fundamental side of things. All right, okay. We will take a look at the technical side later. Smith JT, I feel stressed that I can do the trade well and make money because sometimes I saw some traders lost big money. Hey Smith, welcome back. Yes, you see, when we don't control ourselves, we lose big. But if we limit ourselves, okay, sometimes we miss the boat. But hey, man, time goes on. There's always tomorrow or there's always later. If you miss the boat, it's okay. The feeling of missing the boat and being stuck at being early in the trade with a huge floating loss is the same thing. It makes us very uncomfortable, right? So, but just take care of it, right? So, mind over matter. If you don't mind, it doesn't matter. Learn to laugh at ourselves and take things on the lighter side. Prepare and plan well. All right, Jenny. Hi, sir. Hi, Jenny. Welcome back. Make sure, Smith. My advice is, number one, trade money that you can afford to risk. Number two, don't go big, go small, but many times. Right? Sure, you'll make money. When you take small losses, you don't expect to make big profits, right? You take small risks, you get small profit, but you can do it frequently. Then it accumulates. Okay? Go Walker again. For gold, maybe sell from 1965 because many SL liquid from there. Possible, possible. My mind, how about, whoa, where to take profit? Okay. Hang on. So, before we look at gold, we take a quick look at the dollar index because it is the basis of all trades. Okay, so based on the daily dollar index, it is looking potentially bullish reversal. Why? It is resting on the yearly Fibo. and a monthly Fibo at the same time, and we have a spin top below the 20 BB, so it looks like a potential bullish reversal, but I would prefer to wait for a double bottom to confirm that it is going to be a bullish reversal. So what's going to happen is it's going to go sideways until tomorrow. Uncle Jay will be testifying in Congress, see whether they will like his story or not. If they don't like his story of the current situation of the US economy, they will ask him a lot of questions and he got headache. Then the dollar might fall a bit. Then maybe on Thursday, you say, oh, I got some good ideas according to my crystal ball, blah, 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 blah. Then it might rebound. We don't know yet, right? So for today, it's going sideways. Okay. It is still bearish. A bullish reversal is in the works, but not ready yet. Looking at H4, see, it is going sideways. The bulls may be around, but the bulls are just the baby bulls and lazy baby bulls. So they won't go up that fast. But looking at the trend ribbon, yesterday the trend ribbon for H4 has already flipped to be bearish trend based on H4. H1, H1 is saying that it is still bearish trend, but the bears are not around. Is the crabs who are in control, and the crabs cannot go up, the crabs cannot come down, the crabs can only go sideways. So we can expect price to go sideways based on the dollar index. So when dollar index goes sideways, gold might do the same. Okay, so let's take a look at gold then, because everybody loves gold. Okay, gold. Oh, I had a sell limit on the euro, not done yet. Okay, leave it as it is. We'll talk about that later. Let's take a look at gold. Right. See, the dollar index was sliding. Gold was also sliding, and gold has got a bogeyman at 1962.80. This is the middle of the month. And middle of last month up to today for one full month, the bogeyman is in power. 1960 to 80 seems to be a tough resistance. As you can see, the trend ribbon is going sideways. It's flat, right? There's no indication of any bullishness nor bearishness because the momentum is not telling us anything. Honestly, when I see such a chart, I cannot tell you much because it's flat. All right. How long will it go like that? Let's take a look at H4. Okay. So the flatness of gold, we are looking at a range of $45 for 1 week. Not that much though. But if you look at the trend ribbon, is going sideways. And at the moment, MA75 is the one that's controlling. So gold tried to go up, not that powerful enough. Since yesterday morning, it went up, tested 3 times, no can do, it went down, got supported by the weekly channel, rebounded this morning. It tested once at the top band, at the MA75. No can do, it came down. It has a potential to slide further down because the momentum line has crossed the mid band 15 BB. It's about to cross the mid band 20 BB. Let's take a look at H1. You see, H1 say that the bears might come and play. Why? See, when prices are at the top band of 15 or 20 BB, it is usually a sign of a reversal, right? That means reversal will come down. Okay, so But at the moment, the momentum says the MA10 or momentum line has crossed both the 15 and 20 BB mid bands. So bullish momentum is in the market. So what it's going to do is it might go sideways. It might be supported by the mid bands at 1950. Then it might want to try to meet the bogeyman at 1960 to 88. Let's see how much is this range. It's only $11. Quite possible because today's range is only $11. Yesterday's range was only $11. Gold's daily average is between $35, and that is considered healthy. Anything less than that, that's not healthy. And it has been going sideways. Well, it is the calm before the storm. We can expect to see some storm tomorrow and Thursday. So it is a ranging market. Scalpers will be happy to do it because they are going for maybe $2-3 range, maybe $5 range. Because today's range is only $11. Yesterday's range is also $11. Gold, is it going up? Maybe. See, the support level that I can see is where the mid band 20 and 15 BB at 1952. That could be a good support. We see what happens there. Let's take a look at M15 1950. Okay, see, at the moment the trend ribbon is supposed to be bearish, but let me enlarge this. Let's take a look, see what's happening. From the bearishness of the trend ribbon, it has become compressed, so it is an early sign that the bulls may want to play and may flip the trend ribbon from bearish to bullish based on M15. Let's take a look at M5. M5 is telling us that the bulls are here because and about an hour, 2 hours ago, the M5 trend ribbon has flipped from bearishness to bullishness, but this is a lazy bull. They are not going to charge up powerfully. It will take some time, so it might want to test 1950. Where are you? 1950. Okay, so 1950 32 will be your last resort, but it might rebound from here onwards. 1951, and the target for M5 can be from here to 52 to 59. There is a possibility, and it might want to go to 62.80, maybe later part of the evening. Right, tonight the Yankees will be around, the Americans will be around, so they can add more fervor, more volatility to the market later. Okay, so base M5 is a bullish initiation. I would say that gold is bullish, but it is not a hardworking bull, but a lazy bull. So they'll move very slowly because there's not much impetus, or there's not much trigger to push the bull to go up, because the dollar index is also waiting to be uh, heard at Congress. So, well, there you are, ladies and gentlemen. I think we have come to the end. To answer your question, yes, Adrian, that opinion of oil and gold today. I'm sorry about oil. I don't have the time, Adrian, but gold I've done for you. Gold is bullish, slightly bullish. So we have watch and see, right? See what happens when New York opens. Oh, Ninu. Hello, Ninu. Welcome back. A bit too late. Anyway, welcome back. And I think we have come to the end. Ladies and gentlemen, thank you for your time. If you like what we are doing, please give me some thumbs up. Wow, you my friend, give me the thumbs up, right? Tell your friends about us. Subscribe to our channel. Give us comments, any criticisms, anything that you'd like to see us doing. Let us know. Okay, all right, ladies and gentlemen. Thank you for all your time. Have a pleasant evening ahead. I'll see you guys tomorrow. Hope you have a good one. Bye bye. God bless. See ya.